Hi, everybody. This is Paula from Epitome Tax and Insurance. And today I wanted to come to talk to you about some things that have been coming across my desk. A lot of my clients are really concerned about how their 2020 taxes are going to be looking this year. And so I pulled out some things that I like to share with you so that you'll understand how the CARES Act is going to affect your 2020 taxes. One of the key things to keep in mind is retirement plan distributions. So let's think back to the past before the year of COVID. If you took out a withdrawal from your IRA, your 401k at work, and you were less than 59 and a half, not only were you responsible for paying taxes, taxable income, right? But you're also responsible for paying an early withdrawal penalty, and that was an extra 10% hit. Well, because of the CARES Act, you will see that the early distribution from your retirement plan during this year, 2020, up to $100,000 will not be subject to that extra 10% penalty. So of course, you're still responsible for federal income tax on that early withdrawal, but the 10% penalty will not apply this year for you. And so that's a big discount and a big break if you had to take out funds to survive and to pay your mortgage and to live off on. So keep that in mind. So the other thing to keep in mind is that there are several additional forms that we'll see coming up on the 2020 tax year. And so not only do you get the benefit of the 10% break this year, but the amount that you took out, remember, we're still responsible for paying federal income tax on that amount, but you're able to spread that amount over a 3-year period. And so let's say you took out $100,000, you're able to take the first third and put it on your taxes for 2020, carry over the rest of it to the next year. And we're able to do that for 3 years so that you don't get a big hit on federal income tax in this first year. Now, of course, you have the right to do it. You can take all of the amount that you took out and it could get applied to your tax return as taxable income for 2020. But the great news is that you have options. So you can take it all up front as taxable income, or you can distribute it over a 3-year period if you want to not have such a significant tax hit all at one time. Charitable deductions. So we hear of standard deduction, and then of course we have itemized deduction. So standard deduction is when we subtract or we deduct an amount from your from your adjusted gross income, your AGI, okay? We either take that amount, the standard deduction, or we itemize. Sometimes we call it long form, right? And so that would include medical expenses that you paid in excess of the designated amount. That would include your property tax, that's your mortgage interest, your sales tax, and your charitable contributions. So typically, you don't get to take advantage of your charitable contributions unless you itemize, unless you complete the long form. Well, this year with the CARES Act, you have the ability to make donations and to take them what we call above line, which means that even if you do not itemize, you normally take the standard deduction, you're still able to deduct up to $300 for the charitable deduction. So that helps you out a little bit. So if you are giving to charities and you don't typically itemize, make sure that this year you're keeping those receipts for your cash donations that you're giving to qualified charitable organizations, because you're going to get a little bit extra for the above line $300 charitable deduction. Okay, that's great news. And then for the entrepreneurs out there, there's self-employment tax that you normally have. That's on form Schedule SE on the 1040. So those are self-employed persons that you work gigs and things like that, and you typically fill out a Schedule C. Well, when you fill that out, you also have a Schedule SE, and that's how the government is calculating your self-employment tax, right? So if you're an entrepreneur, not only do you pay income tax, federal income tax, but you also pay self-employment tax, right? That's how the government gets your Medicare and your Social Security money. So there's a benefit that you're going to have this year where you're able to defer the amount of self-employment tax that you pay. So essentially, you're not going to be required to pay the full amount. As always, it's your choice. You can either go ahead, take care of that liability and obligation in the current tax year for 2020, or you can request that you defer some of that amount to a future year. And there's going to be Schedule H for you to be able to do that, okay? Same thing for employers. And so let's say you're an entrepreneur, but you have employees. You have some options in terms of deferment as well. There is now going to be a new form, Form 5884A, and it is for the Employee Retention Credit. And this form is used for you either to report that you've already received, that you're going to be receiving a refundable credit, or that you're already been taking advantage of this when you fill out your 941 forms, which are your quarterly reports that you send to report the income, the Medicare, the Social Security, and the federal income tax that you're withholding from your employee's paycheck. You can either take the benefit there to defer payments on your payroll deposits, or you can go ahead, pay your liabilities on a quarterly basis like you've been doing already, and you can take the employee retention credit on your 2020 taxes. So you do one or the other. You go ahead and take it quarterly and defer those payments, or you take the credit on your tax return. But that is available to you if you have employees. And so just to wrap it up, I want to let you know that I look forward to being able to help you get your business on track. If you need any help or additional support, please do keep me in mind, and remember that I'm here to help business owners, entrepreneurs to increase their cash flow with strategic tax strategies. And so if you need help or a trusted advisor, go ahead, click on the link that is in the post. Give me a shout. Let's meet one-on-one and schedule a strategy session. In the meantime, remember to live freely and have a happy, happy new year.